Hey guys, today there's actually been a new post from Memoirs 92. It's a young single adult independent contractor seeking advice. In today's post, what I want to talk about hopefully is Uncle Dave's approval. I think a lot of the things that I kind of want to talk about is I'm thinking he will say something similar to that, maybe a little bit different, but hopefully it makes a lot of sense to a lot of people. Basically, what he writes is that he's an independent contractor. His car is paid off, renting a townhome. Currently have about $18,000 in credit card debt with a credit score about 635. Uh, However, I have a large business expense that I'm hoping to make pretty soon, which will help advance my career, debating the best option to achieve this. And he kind of gave out a couple of things. Scenario one is sell my car, use that money for the business expense, and then just get another car while still carrying the credit card debt. And he lists out the pros and cons. Pros are not waiting to make the career progress and no business loans. The cons are carrying the credit card debt and risk a high interest rate for the new car because of the debt. And then he has an option number two, which basically says, sell my car, use money to be debt free, get a new car loan, start from scratch to save for a large business expense. Pros are wipe away the credit card debt stress. The cons are delay the business expense and career progress. And then he lists additional question, which is better, having a credit card debt or business/personal loan debt. And what I kind of wanted to address, the first thing first, is that number one, carrying that debt and starting the business, I don't think it's a great option at all. Obviously, keeping the credit card debt and getting rid of the car that's completely paid for and getting another loan on that same car or a new car, and using that capital that you get to starting a new business, which again may require you to spend more money, may require more debt, and now you have no cash, no credit, still a lot of debt. It just, to me, that just doesn't make sense. And number two is that using that to do that, I guess that's a little bit of a better option, which because you're getting rid of something that's in quote unquote an equity that's sitting in the car, and you're gonna be using that to kind of pay off your other debt, that is existing debt. But on the downside of this is kind of like what you were saying, I think earlier, is that you currently have about 630 credit score, and getting another car loan right now, I'm guessing is probably one, not the easiest way to get it, but two, even if you can get it, the interest rates will be higher and things like that. So which I'm not sure will be the wisest decision that you can make. I guess if you're gonna go that direction, because there's only two options available. First, what I will look at is that I would take a look at your finances currently. So look at your reserves to see how much money you have in your checking account/savings account. The other will be also to look at your day-to-day, weekly, monthly cash flow to see how much of the cash that you got left after every month. So you got to make sure that you have at least positive cash flow. But also, when you're thinking about paying up the credit card debt and getting into a new loan, one thing you have to make sure is that I don't know how much you pay on your credit card bills every month for the $18,000, but I'm guessing somewhere between $550 to $600 per month, and you have to make sure that your new car payment would have to be I guess significantly less than that in order for it to say, hey, the reason I'm doing this is so I can do this, and so you're increasing your cash flow, but also on top you have to be able to save more for your business expense that you are hoping to make, right? So I think that's very, very important, and you have to be able to do that. So again, getting another vehicle and with a car payment of less than $550, $600 per month, I guess could be possible, but it's just that I know nowadays the car prices are so much higher and the interest rates are so much higher. So I know a lot of people, and I think I read an article the other day about average auto payment is like $700 per month or something, which is ridiculous. That is, so this I just think I just don't know if that's a good thing to go that direction. And the last question about the credit cards or business/personal loans, to me, at least to me, they are actually two of the same thing. The only difference between the two is that one is a line of credit, so like it's revolving, and then you can kind of charge it and pay back down, charge it back up again, charge that, versus a loan is, it's installment, so it's fixed, but you can go back up and down. But as far as the type of debt and which one is better, I just don't know if the one is better than the other. One of the, I guess, the pros about the credit cards that a lot of people don't really think about when it comes to paying down the debt is that as your balance goes down, because it is, a revolving account, basically, your monthly obligation goes down, which not to say that, hey, you need to pay only the minimum, but your minimum obligation goes down. So if you're able to make additional contribution, again, the delta will actually continue to grow and will help you pay additional to the principal, but also gives you that flexibility. Again, I think that the whole thing about the cash flow and then having this is that having a little bit of cash flow, flexibility, where you have that little bit more margin if something comes up. So in this case, that might be the one thing. But right now, the interest rates are on the rise. So we saw this the entire year last year. We saw it beginning of part of this year, and I guess we're going to be seeing it for how many more months that it's going to come. So I'm not sure if that's the wisest way to start. Keep carrying this credit card debt and stuff like that. I also wouldn't want to do any business loan. Based on what I'm reading, it sounds like you're very, very eager to do this, jump into this. But the more eager you are, I think the more carefully you have to be able to kind of evaluate what you're looking to get into. Especially, it sounds like you don't have any like reserves or the buffer or the emergency fund set aside. So that's really, really important. So like ultimately, if it were me, right, I think the best thing you can do is, look for ways to kind of cut down on the fat, whether on your expenses. I don't know if you have any subscriptions, if there's any way you can kind of cut down on going out to eat, dining out and stuff like that, just so you can kind of focus so much on paying off the credit card debt. I personally wouldn't try to trade my car in. I'm just not sure, and I don't know what kind of car you have and what kind of, condition your vehicle's in and that sort of things. But I just don't know if, getting rid of your car in order to pay off your credit card is the wisest decision or the choice that you can make, especially nowadays. It's just the price of all these things are difficult, and buying a car is actually not that easy. Like there are so many choices: buy new cars, used cars, paying cash, financing, leasing, and all this, all these options that are available. Brands, amenities, mileage. If you're going used cars, how old it is. There's so many choices, and to me, I'd rather not have to make those choices, which requires a lot of time and energy and effort, and it's just I hate that aspect of it. Not negotiating, not pricing, not none of that. I mean, which is also stressful on its own, but also it's kind of narrowing down my search itself to see what fits me better and things like that. Especially when I'm trying to use this to pay up debt and try to start a business. That's just a lot of responsibility, a lot of things that you have to consider, and it's just I just don't know if that's the right way to go. I'll keep the car, try to trim the fat in my life if I can, and try to pay down the credit card debt as much as I can. Maybe just try to as an independent contractor, maybe try to increase my cash flow or the income just a little bit more, so I can use that little bit of extra to pay down the credit card debt. Which again, the beauty of having a credit card debt that you can pay off is that your monthly obligation goes down, right? So it gives you that little bit of buffer. It gives you that little bit of a breathing room, if anything. And then, I say pay off all the credit card debt off, and then focus so much on saving aside or setting aside money for the business. So hope that helps, and until next time, thank you.